This is what ICT students do not understand. The reason why you may not see results, or the reason why you may not have a working system, is because you don't actually know how to use it correctly. Most people that learn ICT will then go onto the chart and highlight things like this order block here, maybe a gap there, another tiny gap there. And once they have highlighted these price arrays, they just simply try to trade away from them. What this means is that they wait for price to get there, and then considering if it's on the upside or the downside of the chart, they buy or sell from it. This is quite literally retail pattern trading. This is the definition of pattern trading. And without me getting into detail, just Google the last hedge fund, either a hedge fund, floor, equity firm, or a legendary trader. Just Google the last one that was using simply patterns. Search the last successful trader that was using simply patterns and nothing else. It doesn't exist. Can you make money off of them? Sure. But if you're in the game of trading to just make quick money and leave, then this video is not for you. What I've learned so far, before you start to do analysis, you need to have identified a draw on liquidity. And you need to do this before you start analyzing. A draw on liquidity is simply a liquidity pool, a location of interest on price, of which you can logically assume and take an educated guess that price will go to. Now, the longer that you watch this video, the more you will learn how to do this. But the main point here is that most ICT students don't even approach trading the ICT way correctly. So draw on liquidity, I'll give you an example. The nearest draw on liquidity in this current position of EURUSD, where price is right there, as we're talking, price is at 1.06835, and obviously it will fluctuate. If we go down a time frame, we can identify that there's a draw on liquidity here, there's a draw on liquidity there, there's also a draw on liquidity there. Now, the question is, which one should we aim for? Because everybody can just locate lows and locate highs and say this is what you're supposed to aim for. But how do you actually choose? How do you pick and choose what draw on liquidity to go for? And this is where context comes in. You need context. And what this means is, in the context of what price has done previously, what can you logically anticipate for price to do next? So for example, in this context, the daily candle on the 24th, which was 2 days ago, had tapped into a fair value gap on the left. This is a typical pattern that you see. A gap on the left, and then this candle fully rebalancing this fair value gap. Now, if you've watched my previous videos, you'll also know that I teach something called the 159 method. And if you want to learn that, just watch my other videos. It's too big of a topic for me to just talk about it here. But for those that know what I'm talking about, you can see here 5 and 9 a.m. 9 a.m. is the reversal point, the gap on the left. As per usual, the same stuff, nothing has changed. It will keep repeating. The next day it happened the exact same way, actually. In the context of the gap there being fully filled on the 24th, and then if we go to the lower time frame after we see this happen on the daily or the 4 hour, we go to the 15 or the 5 minute. The 5 minute should be the lowest time frame you use unless you're very skilled. We go onto that date, which is right here, I believe, where the gap got tapped into. And this is where you get your narrative. So far, I mentioned draw on liquidity, context, and narrative. Now, different traders will have different conclusions and definitions of this, but this is mine, and there isn't a chronological order. So these concepts and functions, you can use them however you want. Just start with draw on liquidity first. This should be the first one. If you want to find your narrative next and then context, that's fine. But the way that I do it personally is draw on liquidity, the context of previous price action, and then the narrative of how we are going to go to that draw on liquidity. How many of you have considered these three things? How many of you apply these things to your system? This is what you have to consider. You can't just be looking at these price arrays like on the daily and then seeing that there, once it taps into it, you sell. That's stupid. You need to have draw on liquidity first, which is a direction being favored. You need to have context second, and then you need to have narrative. Before going on to narrative completely, let me just say that with context, you're then able to figure out which draw on liquidity you should target. So in this case, because on the daily, we've tapped into this gap right here, we've seen a displacement down on the 15 minute and the 5 minute, we then should target the next closest liquidity pool possible. On the daily, it's this, which at the present moment is only 13 pips away. And in this certain context, you can't really trade that, but that would be the target. And the displacement away that I'm talking about is right here when we tap into that gap. And then, like I've taught you guys before, 9 a.m. reversal. This is not the perfect example of a market structure shift or a displacement, but in the perspective of a market structure shift, we have a high taken out right here, we have a low taken out the other direction, and then an actual retracement into a gap. These are the gaps you want to be selling from, not the daily gaps simply because we've tapped into it, You need the drawn liquidity for direction. You need the context of previous price action like this, where it taps into a daily gap. And then the narrative, which is market structure shift with the retracement to the gap. This is one of the simplest ICT models. Is the 2022 model. What people don't do is they do not get drawn liquidity, they do not get context, they do not get narrative. They simply just go into the price arrays, mark out a trade, and then they place a position. This may work a couple of times, but it's not consistent. Now, alongside of this, what ICT traders don't do is backtest. And when I say ICT traders, I mean most of them. The people that have succeeded, when I've spoken to them, they've taught me one thing, and it is collect data. Backtest. Get your hands as dirty as you possibly can. In my description, there's a link to a free backtesting software, completely free. They've got a paid version, but you can have access to the free version forever. They're called Traders Casa and they're amazing. Use them to backtest. Get your hands as dirty as you can. Do the hard work. It's boring, it lasts long, it takes a while, but you need to do it to figure out these things. The 159 method, I found it on accident. I was just backtesting and collecting data, and then I saw a reoccurring theme on certain times on the chart on the 4 hour, and it kept happening more and more and more. But I promise you, you can find more stuff than that, which can help you a lot more if you just backtest. ICT traders watch a video, watch 2 videos, 3 videos, maybe 10, and then they go on the chart and try to trade. That is not how you're supposed to do it. I'll show you something very interesting. This should put into perspective why you're not succeeding or why most ICT traders don't succeed. The very first video, which is the introduction of the 2022 mentorship of ICT, has 2.8 million views. If you go to that playlist and you scroll to the very final episode, you can pretty much tell I've finished pretty much every single episode. I've finished it all. And if you go to the final one, you'll see how many views is that? 307,000 views from 2.8 million. That is 2.4 million people that did not get to the final video. The one before that has less views. The one before that has around the same views, 340. The previous episode has less views again. The previous episode to that has even less views. Episode 36 comes at an astonishing 190,000 views. The previous episode has pretty much the exact same views. Same with the previous one. Exact same with the previous one. And this keeps going on and on and on and on and on and on. Still goes on. Still a lot less views. Still very little views. And you can check this for yourself. I won't go through every single episode, but I went through around 20 so far. And from 2.8 million people that started to watch those episodes, around 2.4 million didn't manage to get to the last video. Now, I don't care if you hate ICT. I don't care if you don't respect the fact that he's selling stuff or marketing stuff and he has had a mentorship in the past. The things that he has taught are very well rounded. For a trader, you need a couple of things to learn and master. And he's one of the few that mentions pretty much everything you need. I come from a quantitative approach to trading. That's my background, where I made quite a little bit of money. I'm not a huge trader. I'm not a largely profitable trader. I'm still learning and I'm a student. I'm trying to approach the prop firm route now, and I've learned the most from ICT. I haven't lost a lot of money. I haven't blown any live accounts. I'm simply in tiny profit and pretty much break even with prop funds, and this is simply because of ICT. I don't come from a professional trading background, but when you listen to ICT and the things he actually teaches, like what I explained with drawn liquidity and etc., it gets pretty easy to understand what you're supposed to do. So to summarize, you need to have a draw on liquidity, which comes from context of seeing what previous price action has done, and your narrative of how you are going to get to that drawn liquidity is what will constitute a trade setup. So this could be a liquidity sweep on the 5-minute, which then constitutes a market structure shift, and then after that happens, a retracement onto a gap, which is your entry. When it comes to targeting, take profit, stop loss, all of that, these things come from backtesting. You need to find out yourself and convince yourself in the hard work and the long hours of backtesting of what works most, what doesn't work, what location of a stop loss is better, what location of a take profit is not, to convince yourself. What I've learned over the years, especially from a lot of failure and stagnancy, is you need to convince yourself that your system works. Now, this doesn't mean that every system works. You need to find one that works and go ham with it. The ICT 2022 model could perfectly work for you, but you need to backtest it. You need to get data. You need to trade it. You need to execute. You need to journal and learn everything about it. What works, what doesn't, the best conditions, the worst conditions, everything. You can't just highlight arrays and then trade away from them. You can't just do that. You also need this. You also need this. You also need this. And then you need to backtest to figure out the stop loss and take profit locations and entries. And with proper risk management, you can make a lot of progress. You can learn how to make money. I don't sell anything at the moment. This video is completely free. And it's something that I wish I learned years ago, before I even found out about ICT. I wish someone made this video and explained everything in detail. But yeah, that's pretty much it. It takes a lot of work to get to a consistent position, and it's not by mistake. If you think all you have to do is open the chart and then go to some price pattern and trade it, you are fooling yourself. You are lying to yourself. You have a very low chance of getting to a high level of trading. I hope this video has informed you and it's been helpful. Take care.